Now, one of the latest D Street debutants, Interarch Building Products, their numbers came by. This is the first quarter numbers. Remember, the company listed towards the end of last month. Revenues and profits contracted quarter on quarter because of seasonality. Arvind Nanda, who's the MD at the company, joins us now. Thanks a lot, Arvind, for joining in. You know, the first quarter numbers, of course, seem dated now because of the weakness in execution, because of elections, etc. Now we're towards the end of the second quarter. Can you tell us how the second quarter panned out? And in light of that, what's the guidance that you have for this entire year when it comes to order inflows, revenues and margins?
Thank you very much for having me on the show. Our business is such that we are more on a half-yearly basis rather than a quarterly basis, which the market demands. Because, like you mentioned correctly, elections and then monsoon and heat waves at different points, because depending where we are executing orders for customers, so it can vary. Last year, the first quarter was better than the second quarter for various reasons. This time, because of elections and not availability of sites as easy as last year. So first quarter is a little lesser, even though it's still an improvement over last year. We are very happy with the results, because in spite of everything, we have managed to achieve a higher turnover and a higher profit than the last June quarter of 23. So we are very excited and in the company that we have managed to achieve that, because we were very pessimistic when the elections were going on about clearances. The second quarter is going to be better for us in this year. Unlike last year the second quarter was a dip compared to the first quarter. But this year, the second quarter is going to be, I would say, much better. Like you rightly said, we are well into the second quarter. And end of the year, our projections already given.
Okay, Mr. Nanda, so let's just get some more details in, because I believe you've inaugurated, a new capacity at Andhra. And the earlier conversation that we had with you, the indication given was that at peak capacity, you can do a revenue of about 550 crores. So can you just tell us what are the timelines of scale up? Now, what is your total capacity? Where will it be by the end of FY25? And in light of that, what's the kind of top line growth in 25 and then 26 that you can project with the capacity addition?
Yes, each fully integrated plant gives us about 550 crores. So we already have 3 fully integrated plants. So that's a capacity of 1550 to 1600 crores compared to our turnover of 1300 in March. So we have capacity enough to achieve our target for 24-25. The new plant in Andhra, which we inaugurated last week, first phase. Second phase will also be done. So first phase adds approximately 100 to 150 crores to our capacity for the balance of this year. And the full plant, once it's finished in February, March, will add another 550 crores. So for 25-26, we will have approximately 21-2200 crores of capacity at current prices of steel. That is the capacity we have got. And our projections given for the following year, 24-25 and 25-26, 26-27 as well. We are well on our target to achieve these, our targets with these capacity that we've already built. As also mentioned in DRHP, we have also got a land tied up in Gujarat now, which we hope to start as soon as we see a order pickup. Plan is next year, June, July starting. But I think the way we are seeing the orders come in and the demand from bigger customers and major projects coming up, I think we will have to start it sooner and build up that also, so that we can remain well on track, as we said earlier, to double our turnover in about 3.5 years.
Double your turnover in about 3.5 years. Just for the benefit of our viewers, if you could repeat the guidance that you had given for the end of this year on the revenue front, because FY26 you've already said 21-2200 odd crores. Are we looking at numbers around 16 to 1700 crores in FY25? Is that a possibility?
No, we are looking at, our guidance was about 15% increase over the current year, which is 24 was 1300 crores approximately. So we are hoping that we should do about 1450 to 1500 in the 25 in the coming year. Because, in pre-engineered buildings, you have to also build up capacities for a lot of other things just in your plant, engineering, sales, execution. So we are well on our, target to achieve that objective. And then maybe another 20% for 25-26.
Got it. 1,400 to 1,500 crores for this year and another 15-20% for the next year. On order books, at the end of the last fiscal, your order book stood at around 1,150 crores. And at the end of the first quarter, it stood at around 1,350 crores. So X of execution, one can assume that order inflows were close to around 200 odd crores. In the second quarter so far, what has been your order inflow? And what's your target for order inflow for the remainder of this year?
We have, our target is 1,350 crores. We have achieved already for this year to turn into orders, because our pre-engineered building order book is not very long. Most customers, even for a very large order, would not order about a year before they need the building. So, it's not 1,350 crores is a very good order book for our business. In fact, we can't take any more orders because we will not be able to execute them as per customers' requirement. So I think order book is well in track. This year, till today, we have already achieved, we have unexecuted orders of 1,350. We are hoping that we will take another 300 to 400 crores of orders in the coming year, as orders are not a problem. It's what we can take and what we can execute, because for Interarch, the commitment to execute is very critical. Our customers rely on us to give them, correct delivery and on-time delivery, because they have their whole project depending on us.
Sure. All right, sir. We'll leave it on that note for today. Thank you for joining in with that quick take on how the business is shaping up. Let's